Okay, let's dive in. We're looking at a really pivotal moment in South Korea's financial world right now.
Mm-hmm. Feels like a major transition, doesn't it?
Definitely. We've got these huge financial groups making massive bets on the future, think trillions of won heading towards tech.
But at the same time, they're tangled up in some pretty intense regulatory battles, often about issues from the past.
Exactly. So today, we want to give you a clear look at both sides of that coin. Where's the money going? What are these big strategic shifts?
And crucially, what are these regulatory showdowns all about? Soundness versus consumer protection. It really shapes the whole landscape.
It does. Let's start with Woori Financial Group. They're making a big push trying to reclaim this title, Corporate Finance Masterpiece. Go. Agree.
Right. And that's not just marketing fluff, it has deep historical roots.
Tell us about that history briefly.
Well, Woori Bank's lineage, it includes banks historically tied to giants like Samsung and LG, Bank Commercial Bank. They've always been big in corporate finance.
Okay, so they have the background.
And they still handle a significant chunk of the main debt accounts for major companies. So the pedigree is there.
And now Chairman Lim Jong-ryun is backing it up with, wasn't the number?
A huge number, 73 trillion won. That's commitment in investment and lending by 2030.
73 trillion. Wow. And they're calling this productive finance.
Yeah. The idea is to steer capital away from, say, the more traditional areas like real estate and really channel it into advanced sectors.
So think AI, biotech, defense.
Exactly those. It's a major strategic pivot. They're essentially trying to fuel the country's move towards a high-tech economy.
Shifting away from real estate sounds good, but
Yeah.
is it working? How are the results looking?
Well, based on the metrics since Chairman Lim took over, it seems to be gaining traction, surprisingly quickly, actually.
Like what?
Group assets are up significantly, over 11%, crossing the 530 trillion won mark. That puts pressure on competitors.
Okay, assets are growing,
Mhm.
but what about profit? And where's the capital coming from for this push?
Profits are surging too. Net profit jumped over 23% year on year, and they're forecasting a record quarter, potentially over 1 trillion in Q3 net profit for the first time.
A trillion won.
Yeah.
Where's that boost coming from?
A lot of it is synergy from M&A. Remember they acquired Tanyang Life and ABL Life?
Ah, the insurers, right? Why are insurers so key to this corporate finance push? Seems a bit different.
It's about stability and diversification. Life insurers provide steady income and massive assets under management, like 50 trillion won AUM in this case.
Got it. So it gives them a more stable base to absorb the risks of funding, cutting edge, maybe risky AI ventures.
Precisely. It balances the portfolio, and you see the synergy elsewhere, too. Their securities arm is now profitable, active in bond markets. Their core capital ratio, the CET1, is stronger, too, around 12.76%.
So the foundation looks pretty solid.
It does, but there's always homework, as analysts say. Managing the risk. Pouring money into innovative sectors means potentially more non-performing assets down the line. They have to grow profitably without letting bad loans pile up. That's the balancing act.
Okay, let's switch gears to Shinhan Financial Group, another giant. How are they approaching this?
Shinhan's focus seems a bit different, more about building on their existing leadership position and looking forward. There was this interesting meeting mentioned.
Right, between the current chairman, Jin Ok-dong, and the former CEO, Lee Young-man, who's 92 now.
Yeah, and it really highlights Shinhan's incredible growth story. They started as an underdog against the Big Five back in the 80s.
The growth numbers were staggering, weren't they?
Absolutely wild. Since the late 80s, deposits up over 400 times, net profit up like 167 times, just massive institutional success.
And what was the key message from the veteran leader to the current one?
The core advice was clear. Shinhan needs to lead in this changing world, especially in AI, and always stay aligned with the country's direction.
AI again. So Woori and Shinhan, both major players, are independently targeting AI and high-tech corporate finance.
It really underscores the trend, doesn't it? That seems to be where the big money sees the future.
Which brings us squarely to the conflict zone, the regulators. All this forward momentum is hitting a wall of, regulatory pressure, focused on past risks.
And that tension is critical for you to understand right now. The Financial Supervisory Service, the FSS, under Director Lee Changjin, is taking a noticeably tough stance on consumer protection, or CP.
Arguing the banks focused too much on just stability NAS before.
Exactly. He suggested the balance tipped too far away from the consumer, especially after past crises. And, there's immense public pressure after recent scandals.
Understandable. But what's the industry's pushback?
The counter-argument is pretty unified. You can't separate soundness and consumer protection. They argue that going too hard on CP, especially with massive fines, could actually destabilize the system, which ultimately harms consumers too. It's two sides of the same coin.
We can see the stakes clearly with the Hong Kong ELS crisis, right?
Oh, absolutely. Banks have already paid out around 2 trillion won voluntarily, but the consumer protection law, it allows for potentially huge fines.
Up to 50% of the sales volume, wasn't it? That sounds enormous.
It is. We're talking over 14 trillion won sold by the big banks. So the potential fines are astronomical, maybe 7 trillion won or even more, theoretically. Even if courts might lower it, just the threat is disruptive.
So if the FSS did impose massive fines like that, what's the real impact for people listening?
It directly hits the bank's capital buffers. That's the money meant to absorb losses and support lending. A sharp drop in soundness, Jianqinmo, restricts their ability to lend, potentially choking off the very productive investments Wuri wants to make. It could cause real stability problems.
And it's not just the ELS issue. There's this other complex case involving Samsung Life's participating insurance, Ru.
Right. Calls for them to sell off Samsung Electronics shares bought decades ago with policyholder money to pay out dividends now.
That sounds complicated.
It's incredibly complex. We're talking almost 9 trillion won reserved for those policyholders. Forcing a sale of those assets raises huge questions about Samsung Life's long-term solvency and stability. It pits current demands against the institution's future health.
So stepping back, it feels like regulators are constantly fighting fires from the past. ELS, old insurance policies, maybe reopening other cases.
And that takes focus away from supervising the future risks, The industry perspective is pretty clear. Undermining capital through huge fines is the worst thing for consumer protection in the long run. You need that buffer. Soundness supervision can't be neglected.
It's a real tightrope walk.
Definitely.
This pressure also shows up in our final example, the mutual finance sector. Institutions like Non-Hype, Shinhype, Suhep.
Yeah, they're facing mandated increases in their loan loss reserves, specifically for real estate and construction loans, up to 130% by year-end.
And they're pushing back.
They are, asking for a 6-month delay. They argue the increases 2 hikes in 18 months are too fast, especially given the current market. It restricts capital.
And they also raised a fairness point, right?
Yes. They feel singled out compared to others like Saemal Yungo, which is under a different ministry and has a different schedule. They see it as a competitive disadvantage.
But the financial authorities aren't budging.
Seems not. The official line is firm. This is necessary for financial soundness. Ho yo. Long-term prudence is winning out over short-term market relief. It's about building loss absorption capacity.
Which again highlights the core theme. Every regulatory move to shore up capital potentially limits the fuel for those big strategic investments.
Exactly.
So wrapping this up for you, the listener, we see a Korean financial sector really mobilizing for the future. You've got Wuri ready to deploy 73 trillion into AI and advanced tech, Shinhan focused there too.
But running parallel is this intense regulatory focus on accountability and capital reserves, often tied to past or potential problems.
The crucial takeaway really is that core tension. How fast can these groups push into profitable, cutting-edge finance when the regulatory climate demands so much caution and such large capital buffers?
That tug of war between expansion and caution, that's really what's going to shape the next decade for Korean finance. It's a delicate balance.
So the question we leave you with is this. Given that boosting soundness often restricts capital for riskier productive investments like AI, which path will ultimately define success? Will it be the aggressive expansion or the cautious preservation of capital? Something to keep watching.